Take a look, please, at the 10-year note. Investors are indeed buying U.S. Treasuries. That drives the price up, and the yield, the interest rate, comes down. 195 right now on the 10-year. Joining the company now, Larry Shover with SFG Alternatives. All right, Larry. America's debt mounting hugely, 16 trillion by November, by election day.
Right.
Do you think that lenders, the people who lend us this money, are going to walk away from treasuries, and that would mean U.S. interest rates go up? Do you see that happening this year?
I don't see it happening this year per se, but I do see it happening in the future. Keep in mind this, something that most of us don't even think about. The average obligation of the U.S. government is 62.5 months at over 2.25%. That's unsustainable. The fact of the matter is we're borrowing 40 cents of every dollar that we spend. So once that thinking, people resonate with that, of course, they're going to stop lending.
But it hasn't happened yet, has it? There's no sign that this debt is going to be curtailed, that its rise is going to be flattened out. There's no sign of that happening whatsoever, and yet people still lend a ton of money to the Treasury. In it pours.
Yeah, you know, it's perplexing because when you think of the stock market, it's rallied, oil, gold's rallied. Yields last year were 3%, now they're 2%, and it hasn't moved. It's stubborn, but the fact of the matter is, it's really momentum and mind thought. Once people get their heads around the fact that we can't sustain this debt level and our government's not doing anything to lower our debt level, then we'll stop being the best house in a bad neighborhood.
So you see rates going up when?
I can see rates going up to like 2.25% this year, without a doubt. That's nothing. I could easily see a year and a half from now when it starts to, when sovereign yields start to compress a little bit, when people start to realize we're not getting anything done in Washington unless a Republican gets nominated and starts cutting spending, real spending. This is not a Sunday school picnic, something we can't fool around with.
If they don't cut spending, if the Republicans don't get in and change things, what do rates go to, say, in 2013, 2014?
I could easily see 3.5% to 4%.
It's still not catastrophic.
Well, I mean, the fact of the matter is, it is catastrophic with the amount of debt that the government has to pay back. That would be perilous for us, actually.
I make it almost $10 billion a week in interest by November of this year. About 9.7 billion a week, I believe it is.
Right.
Not sustainable.
Not sustainable. And keep this in mind, every 3/4 of a point they raise interest rates adds $100 billion to the U.S. debt. That's a lot of money.
Over the long term?
Yes.
All right, Larry, frightening stuff for the long term. Thanks very much for joining us.
You're welcome.
Appreciate it.